Today we're going to talk about GAN stock, and we're going to talk about them because they have just grown revenue at 316%. Yeah, that's correct, 316%. So we're going to go through this company and show how good these earnings were. Probably, you could say, the best earnings of earnings season, if not the best. Definitely in the top three. They were very, very strong. And yeah, we're going to talk about this company. Normally when I talk about the company to start with, I start with the stock chart, but I'm actually going to move that down to the last point because what I want to kind of go through is how good these earnings were, how good this company is, and how crazy this valuation is. And the best thing to do is go through that earnings report and then go through the chart at the end of the video. Because basically, you look at this company here and it goes, it's just grown 316% revenue. And you would think, oh, that's very good. The stock probably reacted very good. The earnings were solid. But typically what has happened in the last kind of few months, since February, what has happened to all small market cap companies, especially small market cap companies that are beaten down and reported earnings that are absolutely amazing? You'd think they'd go up, but no, it's gone down. Pretty much, like I say, summed up all small market caps at the moment. All of them beaten down, and you think they can't go much lower than this. A lot of them have pulled amazing earnings out and they still go lower, and it's just crazy. And GAN is one of those small market cap companies. There's a lot out there, and it's just crazy where the valuations are at the moment. If any of you guys own small market cap companies in the last kind of 6 months, you'll know this. If you ever look at a stock market portfolio when you have small market cap companies in, they're the worst performing stocks in the portfolio compared to a lot of the big blue chip companies. They're performing absolutely amazing. The best performing stocks in a lot of portfolios at the moment are the likes of, particularly mine, are like the Facebooks, the Shopifys, the Microsofts. They're all at all-time highs. All these small market companies are still beating down and pulling out these amazing earnings, and you just go, really? Are you really going lower after the amazing earnings? And it's like GAN just pulled out 316% revenue growth. And you're looking at the share price today, which I'll talk about a little bit more in a second, but you go on it and go, really? You've gone down? You're at 52-week lows after 316% revenue growth? Like, what more do you want? Do you want 400% revenue growth? Do you want 500% revenue growth? And it's just crazy. So I thought, you know what? You can tell I've had a few rants of this, can't you? You know what? Just forget it. It's one of those, and I'll talk about it more at the end of the video. And I thought, you know what? Just talk about how good the company is and how cheap it is and how good these earnings were, and then we'll talk about the company, where it's at the moment, and the stock chart at the end of the video. Otherwise I'll get too annoyed at the start of the video. Anyway, getting on to GAN's earnings. The growth was absolutely fantastic. Like I said, 316% revenue growth. Even quarter over quarter, I think it was like 20+% revenue growth. And also the first 2 quarters of the year is like 270% revenue growth over last year. The growth is absolutely phenomenal. Now, when I bought into this company last year, my whole thing was that, this is in a massive TAM. GAN will, signing up massive partners with Churchill Downs, WinBet, FanDuel, and you're basically getting all these the best parts of all these growth companies in this TAM, in this one company, taking little bits of revenue from every company. And I thought, you know what, this is probably going to grow, triple digits growth, 100% revenue growth, hopefully. But even now, this company's outperforming even my expectations, which is fantastic. 300% growth is amazing. And it was basically summed up in the earnings call, which was like the quarter that GAN have just put in, Q2. The revenue in Q2 was the same amount as the whole of 2020. They just got the revenue from one quarter in the whole of 2020. That's how good the revenue growth was this quarter. And it's just nuts. When you consider that, it's just insane. And obviously the B2B is still very strong. The B2C was even stronger. Obviously that helps with the Coolbet acquisition they made, I think back in Q3 2020. And funny enough, when they acquired Coolbet, GAN got a lot of stick from that and said it was a few people saying, oh, that was a bad move and they overpaid for it. And you look now and you just go, that Coolbet acquisition was really good, wasn't it? And at the time, and GAN seems to have this quite often, is where it brings out earnings and it goes down after earnings every single time. And back when they bought Coolbet, it went down after buying Coolbet, and I was like, that should probably go up. That's a really good purchase. And you look at it now, and it's proven in the financials, and it's just like, well, I told you, why is Wall Street being stupid? There's no doubt Wall Street at the moment is being stupid with this company. and overlooking it. And also a lot of small market cap companies, they're just massively out of favour, and sooner or later I think Wall Street will particularly wake up and go, you know what, we should be buying this company. I've seen a few analysts actually come out, to be fair, and actually say that their earnings were very good and the upside now is even higher, because you look at where, and this is the same for me, after seeing this growth in this company, my target, was probably, I always said $25 to $30, but I'm looking at this company now going, it just keeps going higher and higher where I see this company going. But the funny thing is at the moment as well, is like where the company is valued is going lower and lower. So the actual valuation is going down, and where I see the upside is going up. So at the moment, I just look at this company now and just going, every single quarter, I just look at this company and going, I'm going to make even more money on this. And it's crazy. The people that are selling shares at the moment, I'm just like, just give me the shares. I'll take them off you, because it was a great quarter of growth. Now, the next thing is the profit. So at the moment, what happened over 2020 is GAN put a lot of investments into the company to go, we need to handle the growth. They can't keep taking on these major players and then not be able to kind of handle the growth they're taking on. Fastly is an example. Fastly, that's basically been going down so much that people are kind of moving away from using their platform. GAN don't want to be in a position where they're taking on these major clients like Win, like Churchill Downs, and they're taking on these big clients, and then the platform can't handle it. So they've got to make investments. They've got to make investments into the core bet. They've got to make investments into the servers, people to manage all of these clients. So there's been massive amounts of investments in GAN, and basically what you saw is last year the losses were a little bit wider, and we were losing about 0.32, but at the moment the profit is actually we're still not a profit, but the profit is closing in, and it was very close to get into profitability. And the CFO actually came on to say that potentially we could be looking at profit maybe in this year on some quarters. We might not finish the year in profit, but we will get close to profitability, and then we might do it in 2022. So the profit is starting to come in, and the thing as well is when you're kind of growing at this sort of range, you've got to put the investments to handle that growth, and that's what GAN's done. And now it's getting the rewards, and now the profit's kind of creeping in. And I think from the thing for sure, what you got to remember here is you're buying a growth company. With a growth company, quite often the profit doesn't matter. That will come in later down the line. You look at some very successful growth companies like Shopify, Square. For a long time, they didn't make money. People were buying into that company for the growth. The share price kept going up and up and up. There's a point where eventually people go, okay, what about the profit now? And then that comes in, and then that norm sends the share price higher. And it's the same for GAN. You've got to kind of look, okay, they're making heavy investments, and eventually that will level out and they will make profit. And that is starting to happen, but the growth is fantastic. And it's one of those that the growth isn't even getting recognised yet in the share price point of view. And never mind that we're actually very close to now having a company that is very close to actually scaling up to profitability and triple digit revenue growth, which is crazy. That is a crazy thing to think about. If these guys next year are at these sort of prices and this profit, they're not losing as much money, and we start hitting profitability, and the revenue keeps growing very strong, that's a crazy thing to think about. And it's not even get the there's a point where if you're growing at 316%, that should be respected in the share price. And the fact they're actually closing up the losses now and getting towards the profitability, which will happen very soon, that deserves respect, and it's not being respected yet. But this as well, this is the next kind of boom. If we start seeing them pulling decent amount of profit, that's another game changer. And that's, once again, I'll start saying, at the moment, I always thought, this is $30 stock plus. We start adding profitability in here even stronger, because you look at a lot of companies in this sort of area, say like a DraftKings, for example. DraftKings kind of has a bit of respect. It trades at a bit more of a better valuation. But compare GAN to, like a DraftKings, for example. GAN's growing just as much as DraftKings. It's hardly burning through the money that DraftKings is, and it's going to get to profitability very quickly. But the respect on the company or the valuation doesn't exist, and that's what needs to happen. Wall Street are being stupid, and they need to start respecting this, and at some point it will happen, in my opinion. So from a profit point of view, it's getting a lot better. And I've seen a few people being quite negative to this, like saying, but they're still losing so much money. But it's getting better, and the reason why they were losing so much money is to grow at this sort of rate. You can't grow at that sort of rate without putting the investments in. And now they've put the investments in, they've got the rewards, and now it's getting better. And for me, I was very happy with what was in there in profit. And one thing that kind of frustrated me as well was this headline here from Seeking Alpha. So you can see here they kind of put in revenue, obviously 300% growth. Just the EBITDA was very strong as well, and yeah, 270% year over year growth at the midpoint. But this thing here was GAN. The went from here. GAN misses EPS by 0.06. Now this was really annoying because this kind of hints that Seeking Alpha had the analyst targets of 0.01 or negative 0.01, should I say. And that was kind of frustrating because I looked at what Seeking Alpha analyst had for this earnings report, and it just seemed like it was just so fudged. Like it looked like that wasn't even a correct figure, because if you look at GAN's EPSs historically, they've been like at this sort of range. So I don't have any idea why analysts all of a sudden went from 0.032 to think they would get 0.01. It's kind of weird because historically they've never ever got close to that. You know, I don't understand where analysts kind of got them projections from. It just kind of like they pulled it from thin air, and it kind of was very similar to like Tattooed Chef. Like Tattooed Chef was exactly the same forecast for their EPS, and it just kind of like looks like analysts kind of go, oh, we don't know what it's going to be. It's going to be negative something. Just put 0.01 down, and that's what really frustrated me, because it looked like, and Seeking Alpha went with that headline of the missed because the target was 0.01. But I don't know where that figure came from, because they've never got anywhere close to that. You know, this is what they were doing last year, so why did they suddenly think that reverse was going to happen? And it just seemed, this is the figure that they seem to use for everything at the moment. And yeah, I thought that was really weird. So yeah, I just feel like they got a lot of stick for like missing EPS when the EPS was a massive improvement. And for me, I don't even think that was a real figure, because I don't know where it came from. It just seems like the figure they kind of seem to use for every company at the moment. So even though it kind of went with this headline of an EPS miss, I thought it was fine in my opinion. In fact, I thought it was really good. So yeah, and obviously with this company as well, you've got an amazing balance sheet, no debt on there, you've got very heavy cash. And the big thing to say as well is, you know, this is, you know, the really early stages of this TAM, the total addressable market is, you know, this is the only starting of this iGaming and betting kind of industry. You know, it's got 10 plus years of hyper growth in it through the US into Canada. It's massive. So you think, you know, it's growing at 316%, but it's still going to grow at very healthy rates further down the line. So the TAM is very good, and obviously it helps this way around because there's a lot of sports events that don't normally happen in this period. Obviously you had like Copa America, you had the Euros as well. So it did help this quarter to be quite stronger than what it normally is. But the thing is they aren't even the peak sports for these guys. You know, the US, what's the biggest sporting event in the US? It's the NFL season. And we're very close to it, you know, Q3, Q4, Q1, especially Q4. We're not even at the peak kind of time for this sort of company. So you think if it's doing these sort of numbers now, you imagine what happens when the NFL season comes around. It's going to be huge. And let's put it this way, the guidance that GAN are offering at the moment, I easily see them beating the guidance that they have at the moment. So yeah, that's the very exciting thing, is that we're still very early stages in this company, and we're not even at the peak time, which is just absolutely nuts. And I think when you consider how good the growth was, how good the closing on profitability now, the amazing balance sheet it has, and the future of this company, I think there was one big thing that kind of changed as well last week, and I'm sure many of you guys saw it, is that GNOG was bought for 12 times sales. Now, what you would see on there is that both GNOG, Tillman basically came out and said that they bought that way too cheap, and DraftKings even came out and said they bought it too cheap. Like GNOG probably should have been sold for more than that. I would have probably argued he probably paid somewhere probably about 15 times sales for GNOG, because of the branding and the growth you have and the future TAM. It should have been about 15 times sales. Now the thing is, when you go through all this at the moment and you think, well, if GNOG's is worth, you know, 12 times sales, arguably in my opinion should have been sold for about 15 times sales. If you think GNOG is worth that much, what do you think GAN's worth? Now if I told you at the moment GAN's currently trading at 4 times its sales, it's just nuts. So you're saying here that, you know, that's over 200% more where it could potentially go. If you kind of say GAN should trade at the same sort of premium as what GNOG should do, which I think it should really, that's 200% upside on GAN's side of it. And let's not forget, if you compare GAN to GNOG, GNOG grew at 60%. GAN just grew at 316%. You look at profit, GNOG was burning through a lot of cash because they had to expand. GAN, software company, it's a lot more easy for them to make profit. Profit is closing into profitability. They could hit a few quarters of profitability at the end of this year, and 2022 could be a profitable year for GAN. So they're making so much closer to profitability. Balance sheet, GAN's balance sheet, zero debt on there. Quite a lot of cash for the size of the company. GNOG was very debt heavy. So from a GAN point of view, in my opinion, GAN's a better company than GNOG. It's got the better growth. It's burned through so much less cash. Better balance sheet. GAN's a better company than GNOG. But once again, GNOG was sold at 3 times premium where GAN is right now. And that for me just kind of sums up, even without that, you can see GAN's kind of a dirt cheap company. But now we kind of have proof of what a lot of these companies are worth and what they should be trading at and what this company was sold for. And now you have a company which is better than that one. It kind of shows you how beaten down this is and how stupid Wall Street are being on this company. And it just sums up a lot of small market caps in general. A lot of small market cap companies are generally beaten down, and some of them shouldn't be. And the earnings are fantastic and they should go higher than they go lower. It sums up the whole market, but in particular this one stands out to me as how crazy this has been slept on. And fair play to some analysts. I saw a few analysts actually come out and say that earnings report was really strong. And yeah, it's a buy. And I think quite a few analysts are quite bullish on this company. And there isn't many that cover it. And I think if there are any more analysts that do cover this company, they'll kind of go, yeah, it's actually a pretty good company, this. And it's just massively sold off. And this kind of goes back to the point now where I'm going to talk about the chart, which I normally talk about at the start of the video, but I'm actually going to talk about it now. And today, amazing earnings, and once again, it's amazing earnings from a small market cap company. What happens? We go down 17%. It's just nuts. I mean, when the earnings came out, it dropped 7%, and I was like, that's a bit stupid. And then the stock market opened, and then it dropped down like to 20%. I was like, come on, it's just mental. It's just an absolutely crazy drop. And the thing is now is, this company, came onto the stock market or moved to the New York listing or the Nasdaq on May time 2020. Back then it was valued at $14. Now I tell you right now, this company's just grown at 316% revenue, and the company's valued less than what it was a year ago. The company's valued less than what it was a year ago after growing 316%. It's just crazy. It's just absolutely bonkers how this is at this sort of valuation. This company is trading at 52-week lows after just putting in that earnings report. And the market cap here is 562 million, which is bonkers. I mean, I'm actually thinking now, potentially it should be a $1 billion company. GAN should be a $1 billion company. But the thing is, if this actually came to a 5 billion market cap company, this is actually a 10-bagger. Now, I'm not saying that's going to do that anytime soon. In fact, it's probably way out of my spectrum of, normally 2 to 5 years. I'd say that's probably more achievable if you went 10 years down the line, which is, it's probably achievable when you consider the TAM that's in this market. But, this is crazy at these sort of valuations. And one thing that I've kind of considered, and I've seen a few people actually start saying this now, is like, if people are considering buying GNOG out here, companies are going to be looking at GAN. GAN at 4 times sales, when you've got the growth that it has, not losing that much money, going to get to profitability, the balance sheet, and you think about all the little money it makes from all these companies, a bit from Churchill Downs, a bit from WinBet, a bit from Penn National. It takes all these little money from here, and the platform it has. The big thing that was really good is from the conference call is they went on to say, you look and the peak season for a lot of these platforms is the NFL season, especially the Super Bowl. And the great thing about GAN, when we got to the Super Bowl last year, if you own a lot of these companies, you might know a lot of them went down because there was that much demand, which is great. It shows how popular this industry is, and especially for an event like that, is that a lot of these platforms went down because of the demand to get on there. But GAN's platform actually didn't go down, and that's how good it is. And a few of these companies are trying to bring a lot more in-house to support it, and they can't do it because they don't realise how hard it is to do it. And GAN, you'll be looking at a lot of these platforms here that are in this sort of space and will appreciate what GAN has. And a lot of these will be looking at the growth and the ability to have this platform in-house. And for sure, a few people like WinBet or Penn National will be looking at this sort of company and going, 500 million market cap? Let's throw an offer in. Let's throw an offer in for about, 1.2 billion. Let's see what happens. Now, that could happen, and that would mean 100% upside from here, which would be amazing. I'm not saying it will happen, but I'm sure a few will be considering it. And to be honest with you, I don't want it to happen because I feel like the company has the potential in the long term to be more than a 1 billion company. That's the thing. I don't, GNOG, I wanted them to sell it because I didn't want to own DraftKings, GNOG, and GAN. But at the moment, I look at DraftKings and I think they're going to be probably one of the biggest players in the sport betting side of it. GAN, I think, is going to benefit from getting all the little revenues from all the companies in this sort of side of it. And I think they've got massive potential, and I don't want them to sell. But I'm just saying here as well, I'm sure there's a few other players in this space that are looking at GAN at the moment and going, let's throw an offering for about just above 1 billion now. And I've seen a few people say it as well, and that would actually make sense for it to happen, which is also another thing with the company at these sort of prices right now. Now, with all this being said, obviously it's massively sold off. It's beaten down. And the big thing is always to remember, the company is not the share price. I look at the company is firing at all cylinders. They've just brought out an amazing earnings report. And sure, the small market caps are just all beaten down. It's not reflecting at the moment, but one day it will be reflected. One day this company will go up in value, and people and Wall Street will realise they are stupid and they should have bought this company rather than sold it. I mean, whoever sold it today is just crazy. I will try and buy as many shares as I can, and I think the big thing is just to realise that, and this is the big quote for me, is the stock market is a device for transferring money from the impatient to the patient. And I think, as Warren Buffett says here, I look at this company here, it's performing absolutely amazing. And you know what? Sure, right now it might be a little bit frustrating seeing the share price go down after such a good earnings report, but unfortunately, it is part of the game. It's just being patient, and sooner or later, people will realise this is an amazing company, it's dirt cheap, and the buyers will come in, and it will be very successful. And that's the big thing, is just remembering, invest in the company, not the share price. And at some point, the share price will come back on this one. And yeah, I hope that little mini update was useful. And overall, amazing earnings, and had to try and not get too frustrated talking about the share price on this video for sure. But yeah, hopefully that was a little bit useful. If it was, if you could hit the like button, if you're new, subscribe. And if you do want to know when I'm buying and selling companies, make sure you join the Patreon. Link is in the description. If you do want to start investing, maybe buy a few shares in GAN, there's some links to some brokers in the description, like Stake. Join through there, you get 2 free shares, and Free Trade, you join through there, you get 1 free share worth between £10 to £200. But that's the video for today, guys. I hope it was useful, and I will see you on the next one.